Monday, November 6, 2023, Monaco 64, home of alternative economics and contrarian views. Today, we're going to debunk Jeff Christian's knowledge of the futures market. And why am I in a position to do that? Well, because I worked in the futures market as a broker for 19 years. And I'm going to follow up on Bix Weir's very good video about this entitled Silver Alert. Jeff Christian admits nobody is willing to short COMEX gold and silver. Yes, and before I do, I'd just like to apologize that there was no live stream yesterday. We had some friends over for Sunday lunch, and it was difficult for me to like kick them out of the house for the live stream that happens. And the other thing I would say, if you're still interested or are you looking to buy gold or silver, maybe for the first time or maybe not even for the first time, check out my affiliates below in the description. They have some special deals, especially here in London with gold investments. And you need to use the promo codes, though, if you're interested. And also in the US, ITM Trading and Miles Franklin, they always have special deals. You just need to ask and make sure that you tell them that Mario or Monaco 64 sent you there. So what I want to do for those of you who are new to the channel is basically show you and prove to you that I was a futures broker for 19 years. Because one thing I hear Jeff Christian, and I'm going to come to Jeff Christian a little bit more, his background, but he accuses people like me and Bix and others of being conspiracy theorists, having no knowledge of financial markets. So that's why I'm doing this, and it also gives you a little taste of my background. So as you can see here by these business cards, I started out in the futures market at a company called Gerard and National Intercommodities. It was more commonly known as GNI. Eventually, they were taken over by UBS, I think. I wasn't there at the time when they were taken over. And that was in 1993. Prior to 1993, I had been working really in Switzerland. I started out in the late 80s. I worked for a small private bank. And they actually held mostly bonds, but we traded everything. We even traded some futures. We traded stocks as well, foreign exchange, but the focus of our business were bonds, corporate bonds, government bonds. They even sent me in 1990 to Euro Market Trading Consultants, bond market workshop, as you can see here, and it was in London. So, yeah, I don't just know about the futures market. I know about bonds and how they're traded, how they're settled. So after this, I went back and to Switzerland, and they paid for this. And I worked in Switzerland for about 3 years before I came to London. I was offered a job actually to trade cash bonds, but I wasn't too happy with that firm, so I got a job with GNI. And as you can see, after GNI, I actually went to work for a Citibank, Citi Futures, their futures department. And all the time I was doing government bond futures and also interest rates. And they were taken over, though, the futures department of Citibank by ABN AMRO Chicago Corporation, as you can see. After that, I was there for about 7 years, including the Citibank years. And then I moved over to Men Financial, which became MF Global. And as you can see there, it says senior broker. And you can see that all these firms were regulated. GNI was regulated at the time by the Securities and Futures Authority, or SFA. And then, as you can see, ABN AMRO, under ABN AMRO, it became, it was still the SFA, but then it became the FSA. And then I ended my futures broking career at a company called Mint. As you can see, that was in, I think, May 2012. So you can see there fixed income derivatives, but it was futures, of course, not over the counter. They did over the counter. So that's my background there. And I also have here proof for you. And I won't show it to you in too much detail because it has old clients' names. But I'm sure a lot of them are probably not even in the business anymore because it's from the 90s. But I have clients from, for example, Caisse de dépôt et consignation, which is CDC, one of the biggest banks in France. You can see here, one of my very good clients in the 90s was a fund from Italy called Arca. So let's see, there's one of their business cards here. Arca, you can see. So all my clients were professional market participants. So when Jeff Christian says, oh, these people have no knowledge of markets, he's just trying to discredit people through saying things he has no proof of. So I could go over and over here. I got some savings banks in Italy. I did a lot of business with Italy. CCF, which is a French bank, Crédit Commercial de France. I mean, it's all here. I even had a client, Lehman Brothers Milan. So as you can see, it's all here, National Bank of Bahrain. So just wanted to put that out there. And I recommend Bix Weir's video on this, because basically what Jeff Christian is saying is that market makers in the futures markets, they're the ones who sell to you or me, to the funds, to the private clients who want to go long, market makers. So as I said, I worked for a total of 19 years in the futures market and about 4 years in the bond cash market. And I traded some gold and silver futures when I was at MF Global. It wasn't the bulk of my business, but we traded that for one of our big clients regularly. And I can tell you categorically that I've never made a market as a futures broker in 19 years. And why is that? Well, because, I'm actually going to refer. So you don't have to take my word for it. I'm going to refer to this book. It's Options, Futures, and Other Derivative Securities. So John C. Hall. And I bought this book in 1993. Which was the year that I started working in the futures market. And I had actually traded options in the futures market for myself in Switzerland, even before I started working in finance. So here on page 18, let's go to the basics. Futures markets and the use of futures for hedging. Futures contracts were introduced in Chapter 1. They are agreements to buy and sell an asset in the future for a certain price. That's all they are. Unlike forward contracts, they are usually traded on an exchange. So there you go. They're traded on an exchange. And there are no market makers on the exchange. So we could hire like a big hall, for example, and we could do a Monaco 64 exchange, and we all stand there and we start trading gold futures contracts. And many of you will be looking to buy, right? You're going to signal that I know some of the hand signals, even though I didn't work on the floor of the exchange. I worked in the office, and I passed a lot of my clients' orders to my colleagues on the floor. Why were they there? Well, because some of their clients like to come directly to the floor, and then they pass the order to the pit where we would be, the Monaco 64 exchange. So, and on the floor, there are two different kinds of traders. There are the traders for the brokers, and there are the locals or the independent traders who trade for their own account. So everyone's bidding and offering different prices, different sizes. But I can tell you that it's illegal on the exchange to cross. And what does cross mean? Well, it's to have a bid and offer of the same price. So it wouldn't make sense that I would be bidding and offering, which is market making, on a futures exchange. So when Jeff Christian tries to excuse the bullion banks for shorting, saying that they have to make a market in the futures, that's completely rubbish. And I challenge Jeff Christian to come on my channel and prove to me that there are market makers in the futures market, maybe in the over-the-counter market, but here we're talking about the open interest in the futures market. And Jeff Christian says that the reason why there's such a big short position is because the market makers are making sure that the retail and whoever wants to buy can buy from someone. But that's total BS, as I said. And if you go to the index of the book and you look market makers, and this is a book on futures, and I can show you here, there's only one page that talks about it, market maker, as you can see, right? Page 114. So I go to page 114, and what is it about? I said there were no market makers in the futures market. Well, it's the options trading on futures. And why are there market makers? Well, because options are more elaborate. So, but even in options market making, they only make market for other brokers. Let's say like me, if one of my clients wanted to trade options, I'd go to the floor to my colleague from GNI, and he'd go to a market maker near him and ask a bid and offer. But it wouldn't be, the market maker is not a client and doesn't really make a market for the hell of it. He makes a market so that other counterparties can trade on it. They don't take positions. They close out their positions as quickly as possible, and that's why they make a bid and offer, to make sure that their book is not leaning a certain way. They're not really directional traders. So when Jeff Christian comes out and says that the market makers are just providing liquidity in the futures market, he's completely wrong. First, because there are no market makers in futures. And second, even if there were, they wouldn't really want to have an exposure. So who are these market makers? Who are these commercials? Well, they're the bullion banks, and the reason why they go short the futures is probably because they're doing it for the US Treasury and the Fed and other central banks, and they do it probably through the BIS. And you could say, well, it could be Newmont or Barrick, possibly. I've looked at their numbers. They produce about 10 million ounces of gold every year together. Yes, there are other producers, but let's focus on the two big ones. That's the equivalent of 100,000 COMEX contracts. But I would say that a lot of their production, they sell it right away to the refiners. And the open interest, I think the latest here for the commercials is in gold is almost 300,000. It's 288,000. And why would a Newmont or a Barrick or any other gold producer or even the silver producers come at exactly when gold is breaking a really key level and, you know, smack the price? Why would they want to do that? I mean, I do admit that they do probably do some hedging, but it's not that big. And the reason why, in my opinion, they have a huge short position is for the central banks. And the other thing the bullion banks do, they all predict, they all come out like once a year or maybe a bit more, and they forecast their prices for gold in the next year. And these prices are always really conservative. And do you ever wonder why they kind of do that? Well, it's because they know where they've spoken to their clients, who are the central banks or some treasuries, and they let them know, for example, where they're going to be doing this leasing and this shorting to keep the price manipulated. So what about Jeff Christian, his background? Well, he started at J. Aaron, which was the Goldman Sachs's bullion trading arm. And guess who started at J. Aaron, who worked for Goldman Sachs? Robert Rubin, who became the Secretary of the Treasury in the 90s for Bill Clinton. And Gada documents this, that Robert Rubin had this strong dollar policy, and most people thought, you just say strong dollar and become strong. Well, it's because they were doing a lot of leasing of the gold from the central banks to sell it in the futures market to keep gold suppressed. Because if you suppress gold, you kind of give the signal that there's no inflation. You keep bond prices elevated, and you keep the dollar strong. And it's interesting as well that after Rubin left, his deputy, Larry Summers, friend of Epstein, right? He came in and continued that policy. I don't know how long he was Secretary of the Treasury for, not that long. And he even wrote a paper, which Gada talks about Gibsons Paradox, how the gold price is so important to maintain the bond market from getting hit and to keep the dollar strong. So there you go, J. Aaron. So here you have a guy who used to work with or for Robert Rubin. Yes, he left J. Aaron and went on to create the Christian Precious Metals, CPM group. But his clients are all these central banks, all these bullion banks, and all these treasuries. And he tries to keep this sham going where they manipulate the price of gold and silver. And why do they do that? Well, because the price of gold and silver are basically the opposite of the dollar. And the higher these prices go, it's the end of the dollar. It's different for the dollar because it's at the base of the monetary system because of Bretton Woods and the petrodollar. But for other currencies, gold and silver are not as important because for them, the base really is the dollar. So, and that's why they do it. So there you go. Hopefully you understood what I was trying to say here about the markets. They might seem complicated, but it's not. So there are no market makers in the futures market. And if people try to make markets in the futures market, they would be breaking the rules of the exchange, because COMEX, any exchange, you have to go put your order on the exchange first. Yes, it used to be in the pit. Now it's electronic, but I can't call my broker or banker and say, please make me a market in futures. No, he will put my order on the exchange. I'll tell the broker, I want to sell 100 gold futures contract. He say, okay, Mario, let me put that order in. We can sell it at this price now. There's a bid there in the market. So he wouldn't do anything for me. And Jeff Christian is trying to tell you that the market makers take the other side. They don't. First of all, there are no market makers. So there you go. And hopefully this shenanigan, this manipulation will end one day. I think the fact that the big Chinese banks are leaving the LBMA is part of that. because they know that it's a fraudulent market, the LBMA and COMEX. It's based on really nothing. And Jeff Christian is part of this propaganda to try to discredit people like me and others from exposing this. So there you go. With that, let's quickly look at the markets. It's 8:25 a.m. London time. We've got spot gold trading at $19.87. It's down about $5. High's been 94 and the low 81. And someone tweeted this out on Friday. Yeah, and let's say Newmont or Barrick wanted to, would they want to make sure the December gold futures trade settle below 2,000 on the week? I don't think so. Who would want to do this? Well, the central bankers through the bullion banks, because it's like a thermometer gold. They want to try to tell the world that their policies of inflation and debt and negative real rates are normal. So that's why they do that. And it keeps investors away. They say, oh, everything's fine. Look, gold is not even at 2,000. So Jamie Carrasco, thank you for your tweet there. He says, gold had a great week fighting Mr. Slammy. Pretty sure those hedge funds added 82,000 net short contracts in the previous two weeks. Got a hell of a whooping. Plus, all central banks are losing money and are in need of more of the credit with not in our lifetime Yellen. There you go. So that's why they do it. So what about silver? Well, silver is unchanged. Is at 23.20. High's been 26, the low 23.08. The Dow futures, that's up 50 points. The NASDAQ is up 18. S&P is up 6. To the currencies, sterling is up slightly. And the currencies did really well against the dollar on Friday. And gold did nothing. So gold dropped quite a bit against the pound and the euro. Am I concerned? No. I think things will revert to normal eventually. But right now, yeah, we're at 123.94 in sterling versus the dollar. And it's interesting that on Friday, the low was in the 21 handle. So it's trading like a banana republic currency, not just the pound, but all of them, really, all the fiats. The euro is up slightly as well at 107.45. The dollar is unchanged versus the yen, 149.41. The yuan has strengthened quite a bit, and the dollar has dropped back below 7.30. We're at 7.28. The Aussie dollar is at 65.15, and that's unchanged. The dollar is down slightly versus the Canadian dollar at 136.46, and the Kiwi dollar is unchanged, just below 60 versus the dollar. To the other commodities, we got WTI crude up 1% at 81.20. Brent is up 7/8%, 85.50. Platinum is unchanged at 932. And high-grade copper is up 1/3% at 372. So yeah, treasury yields have dropped quite a bit. You can watch interview I did with Clive and Andre on Saturday. I highly recommend it. I'm going to put it up in the cards if you haven't seen it. And we talk all about the bond market. So this morning, the 10-year yield is up 3 basis points at 4.58. The Japanese government bond 10-year yield, that's dropped significantly as well. It's now at 0.87. Last week it was testing 1%. So it looks like the central bankers and the treasuries have gotten control of the bond market for now. What about in the UK? The 2-year yield is at 4.72 and the 30-year is back below 5 at 4.85. So there you go. With that, I'm going to wish you all a very good day. Take care. Bye.